In this video, we're going to look at the new 100% qualified meal deduction. It's for the years of 2021 and 2022. In the past, we've been able to deduct, actually since 1993, we've been able to deduct 50% of qualified business meals. But under this new law, under the CAA, the Consolidated Appropriations Act, for a 2-year period, it's now going to return back to what it was prior to 1993 to 100%. I want to make a couple important points, not just that it's deductible, but one, it's not retroactive back to 2020. I get asked that quite a bit. And no, it starts January 1st, 2021 through December 31st, 2022. Secondly, if you get to looking at this act, and I'm going to give you a heads up on some regulations coming down the road, but see, it appears to be that the CAA Act modified the actual change back under TCJA in December of 17. That act said meals are the cost for food and beverage from a restaurant. So then in the CAA that just now happened in there, it says that, and it refers to these business meals from TCJA. So it appears when the regulations come out that this 100% is deductible if from a restaurant. And that was really, if you read some of the articles on it before this passed, that was one of the big items. But the other thing before we close this, what's deductible, during the year of 2020, we got some proposed regulations out that was actually from the Taxpayer Compliance Act, the TCJA Act of December of 17. And the reason why it's important, it actually gave us guidance on what is a qualified business meal. So we're now in 2021 or 2, we're wanting to take a deduction of 100%. What qualifies as a business meal? Here are 4 points. 1, the expense is not extravagant, it's under the circumstance. It's not lavish under the circumstance. So I'll translate that into our lay terms, and that means if you're down here in the Ozarks where I'm from, a hamburger is not going to be the same price as if you're in Chicago or New York downtown. So the thing about it, it's not that it's a certain dollar amount, but how is it reasonable and not extravagant or lavish based on where you're at. The second requirement in the proposed regulation is the taxpayer or taxpayer's employee is present at the meal. That's pretty straightforward. Has to be the taxpayer or that taxpayer's employee. The third one is the meal is provided to a business associate. A business associate. Well, what does that mean? Well, if we look at these proposed regulations, quote, a business associate is defined a person with whom the taxpayer could reasonably expect to engage, deal with in an activity conducted for a business, for a trade or business. So let's just look at that real quick. So whoever, for example, if I go to a business associate, examples I can think of would be, it could be a taxpayer's customer, it could be a client, it could be a contractor, it could be a supplier, it could be a partner, a professional advisor. So again, those are examples of a business associate. So that business associate, if I take that business associate to a meal, I have to do it with the belief it's either a current client that I'm meeting in a business purpose or could reasonably expect to engage or deal with in that active trade or business. I have to be in an active trade or business, and it has to be a business associate related to that business activity, and I'm doing it for a profit. So in summary, starting January 1st, 2021 through December 31st, 2022, we will be able to take 100% deduction for qualified business meals that we meet the proposed regulations that just came out and active conduct of a trade or business meeting with that associate. I hope this video helps. Again, it's, as you can see, a simple term of changing something from 50 to 100%. We still have to know the law. Subscribe, and we'll continue to put out more of these videos on the CAA, Consolidated Appropriations Act of 2021. Thank you.